Can Apple go to $300 a share? Let's find out. So before I jump into the forums, I'd like to give you a brief overview of the company history. So Apple was founded on April 1st, 1976 by Steve Jobs, Steve Wozniak, and Ronald Wayne to develop and sell Wozniak's Apple I personal computer. The company was officially incorporated in 1977, and then they went public in 1980. 1984 was kind of a breakthrough year. They released the Macintosh personal computer that year, and in order to really showcase it to the market, they came out with a commercial called 1984, which is directed by Ridley Scott. Ridley Scott directed Alien, Gladiator, Black Hawk Down, Blade Runner, and a whole list of other movies. And this commercial was really one that set itself apart from a lot of commercials at the time. It has that Blade Runner / Prometheus vibe for you Ridley Scott fans out there. But anyway, this brings us to 1985. They're running into an issue with high costs. They started facing issues on that regard, and then conflicts with executives. What happened next is Wozniak stepped away and Steve Jobs resigned. He soon after created another company called Next. So Apple went forward. Into the 90s, they started running into issues, losing market share to Microsoft. This brings us to 1997, so about a little over a decade later. Apple's on the verge of bankruptcy, and they decide to buy Next, which is Steve Jobs' company. They buy it for about $400 million to resolve. They were really running into operating system problems. That's where they needed a lot of help, and they bought Next. And at that point, Jobs, he did not become CEO at that point. He actually stepped into an advisory role. It wasn't until about 3 years later in 2000 where he took over as CEO the second time. And at that point in 2000, he presented two products that would really help, in his vision, separate Mac from the competitors. One is the Mac operating system, and the next one is iTools, which eventually became iCloud. Both ended up being a huge success. This brings us to 2001. They launched the first of two store locations, one in Virginia and one in California. And then in 2001, they launched the iPod, the little music player I think most of us remember. Some of you who are born after the year 2000 probably don't remember that, but Apple sold over 100 million units. Then in 2003, iTunes was introduced. They were selling music for 99 cents a song. At the same time, you were dealing with companies like, I remember Napster and BearShare and these kind of hacky platforms filled with bugs. So this was a really safe, smart play to get legitimate music out there. Soon after, of course, Spotify came out, which is a whole other disruptor. But the 99 cents play was a big deal. Over time, it was actually between 2003 and 2008, they had 5 billion downloads. So really impressive on iTunes in itself. Then in 2005, they announced they would step away from PowerPC processors and move to Intel chips. So those are the chips that really power the Mac computers. Then between 2003 and 2006, their profitability skyrocketed. They actually went from, get this, $6 a share to over $80 a share. Again, that was just in 3 years. Then 2007 hit. This was a big year. This is when the iPhone came out, along with Apple TV. But get this, they sold 270,000 iPhones in about 30 hours. Then in 2008, they released the Apple Store. This was a smart play because this allowed Apple to generate revenue without selling a physical product. With physical products, you always have to think about like supply chain. You have like either plastic or metal or rubber or whatever. In this case, you're just making money off digital sales. So within 1 month after launching, they sold 60 million apps, and their daily average revenue skyrocketed to $1 million. And get this, Jobs actually speculated that the App Store could become a billion-dollar business on its own. As of 2022, the App Store alone generates $78 billion. So he far underestimated the power of that revenue stream in itself. Then things started taking a bit of a downturn for Steve Jobs. In 2009, he took a 6-month leave of absence due to his health. Then unfortunately, in 2011, he did pass away at age 56 due to pancreatic cancer. At that time, Tim Cook stepped into the CEO role. Then fast forwarding here a few years later, we get to 2018. They reached a valuation of 1 trillion. Then in 2020, just 2 years later, they're valued at 2 trillion. And then in 2020, this is where they started making some big moves with processors. So we know they were with Intel for a while. They decided to move away from that and develop their own. And that's where that M1 chip came into play. I actually have a MacBook Pro here with an M1 chip, very impressive product. And then as of 2022, they started working on the M2 chip. And then in 2022, they opened an online store that allowed anyone to view repair manuals and order replacement parts for their iPhones. Prior to that, they would not allow that. So that really brings us up to speed with the company history. Now let's dive into the 4 M's. Okay, we'll start with that first M. That's the math part of investing. We'll jump into Tykr. So we can see Apple is on sale, scores 61 out of 100, and margin of safety of 75%. That score tells us the overall financial strength of the company, and the margin of safety gives us the upside potential. We can see here the share price is about 189 as of the recording of this video, and the fair value is 398. This is the expected share price in 10 years. I have mentioned this before. Tykr is open source. You can go to tykr.com, go to the education tab, and you can just scroll down to calculations. You can see how we arrive at those numbers. We look at the EPS growth rate quarter over quarter, year over year. And this is really inspired by Warren Buffett, Charlie Munger, and we have to give a lot of credit to Phil Town and some of the books he wrote, including Rule 1 and Payback Time. Anyway, let's move back to the stock here. So with this, let's dive into the financials a little further. We can see the revenue's looking really good year over year. Net income, same thing. EPS is just net income divided by outstanding shares. We're looking really good. And then let's jump to the earnings calendar. This is the metric, the most important metric that really causes share prices to go up and down. So you have your estimates and you have your reported. And large institutions, those are large financial institutions, are really the ones that move prices up and down the most. Yes, retail investors like you and I can move share prices, but it's the large institutions that really move it the most. So what they want to see is the report coming out beating the estimates. And you can see the latest was May. They beat by 6%. They did have a miss in February, but prior to that, you can see here, consistently beating estimates. That's a great sign. Let's go back here just a page, and we can see same thing. In this case, there's some quarters where, really impressive. You can see beating the estimate by 27%, 12%. But looking really good over time. And that consistency is what we want to see, consistently beating the estimates. So that gives us confidence. In summary, I'm not going to spend too much time here on the math part of investing. Apple is strong. On paper, the financials are outstanding, and we like to see that higher margin of safety. So with that first M, we're going to go ahead and check that box. Now let's move on to the meaning. This is the business model, and how does Apple make money? So Apple's business model can really be broken into 5 different channels. You have the iPhone, which is actually 52% of revenue. Then you have the Mac, which is 10% of revenue. Then you have iPad, which is 7%. Then you have wearables, home, and accessories, which is 11%. And then you have services, which is actually 20%. That's the second highest revenue division of the company, or channel of the company. And that's really impressive because we like to see revenue that's software based. I'm a really big fan of software as a service or platform as a service. So this is a segment of the business that generates revenue without selling something physical. We have to keep in mind that when you sell something physical, there's supply chain, there's product, there's material involved. Like I look at, my iPhone, and there's metal, there's plastic, aluminum. There's a lot of components that need to be put together. And yes, they sell it for a premium, but there's products there. But when you can sell something that's digital, you're not manufacturing something, that's a really good place to be. It also has really high profit margins compared to something physical. Something physical has lower profit margins, software, really high profit margins. So with that segment, the services segment, you have Apple Card, you have Apple Pay, Apple Care, Apple Arcade, advertising, cloud services. That's a really solid part of the business. And that part of the business will continue going with relatively low maintenance. Yes, you have software engineering that will continue improving and adding more, but it's a lot less effort than manufacturing something physical. But overall, this is a really strong business model. We like businesses with multiple streams of revenue. With that second M, the meaning, we can go ahead and check that box. Now let's move on to the moat. This is how Apple really stacks up against the competition. So I kind of ran into this issue with the Microsoft videos. There's not like a one-to-one ratio fit, like a direct competitor. There's a little overlap, but not one-to-one, because Apple, of course, it has multiple streams of revenue. So we're going to start at the top here. The obvious one is Microsoft. And what I'm doing is looking at the MacBook Air, MacBook Pro versus Microsoft's Surface and Microsoft's physical products. And in this case, Microsoft has a summary of watch, score of 78 out of 100, and margin of safety is 0%. So Apple is the clear winner. And I will also say this, being a MacBook Pro user, very impressed by the speed of the product. I'm also impressed with the M1 chip in this computer. Extremely fast. For those of you that do anything that is multitasking or even like editing video or rendering video, anything like that, this thing is fast. So in summary, you can stack it against Microsoft. It's the clear winner. Then I decided to take Apple versus another large tech company. It's not a direct competitor per se, but just another tech company we might be looking at to invest in. So in that case, looking at Alphabet. And you can see here they're a watch, scores 44 out of 100, a margin of safety of 61%. So in this case, Apple does stack up right against Alphabet and is the better pick as well. Next up, we want to compare Apple against 3 hardware companies. We're going against Samsung, especially on the phone side, the iPhone. And then we're going against HP and Dell on the computer side. So with Samsung, we can see the summary is a watch. Score is 61 out of 100 and margin of safety is 0%. So Apple wins in that case. Then we have HP, not looking too good. Overpriced, score of 28 out of 100. Margin of safety is 0. I probably wouldn't touch that stock with a 10-foot pole. And then you have Dell, which is overpriced. Score is 39. Margin of safety is 0. Also a stock I'd probably avoid. So when you take Apple against the competitors, it is for sure the standout winner in this case. The iPhone, the MacBook Pro, MacBook Air, and the Surfaces division really make Apple stand out from the competition. So we can go ahead with the moat and we can check that box. Now moving on to the management. Prior to joining Apple, Tim Cook actually started his career at IBM. He then went to Compaq and worked his way up to VP of Corporate Materials. And then in 1998, Steve Jobs actually started recruiting him. We have to just reverse the clocks back here. It was 97, just a reminder. There was that acquisition of Next. Steve Jobs returned, and there was that about 2-3 year period where Jobs was really in an advisory position. That's when he recruited Tim Cook to join the company, which was a smart play. Then Tim Cook eventually worked his way up to Chief Operating Officer and then took over as CEO in 2011. Now, there's something I like to point out here. This is from Tim Cook. He mentioned there are 3 things he really took from Steve Jobs, and I like to point those out. Number 1 is focus. And he states here, you can only do so many things really well, which means you have to say no to a lot of things. I know Warren Buffett kind of says the same thing. You have to learn to say no to a lot of things. It's all about focus because you can be distracted by so many shiny objects, you can say. So stay focused. Number 2 would be relentless pursuit of excellence. This is actually one of Apple's core values. And number 3, this is really important for all of us, which is life is fragile. We're not guaranteed tomorrow. So as he says, give it all you got. All right, now I'd like to talk about the Glassdoor rating. I know that not all companies are on Glassdoor, but again, I've mentioned this in other videos. It's a great place to go to really see what people are saying about the company, the employees, especially about management. You can see here the company scores a 4.2. I like to see 4.0 or higher. And the Glassdoor CEO approval is 90%. That's outstanding. Anything over 80% is pretty good. So with the 4th M, we can go ahead and check that box. Before I talk about where the share price is going, I like to talk about the latest news. So one thing I'd like to point out that Apple isn't really leaning into the AI buzzword like a lot of other companies are leaning into. I am seeing more new tech startups coming out that are saying things like powered by ChatGPT, yet you have no idea how the business provides value to customers like you and I. It's just really a marketing play. And I like that Apple's being more contrarian here, not using the buzzword. They do state here, unlike its rivals who are building bigger models with server farms, supercomputers, and terabytes of data, Apple wants AI models on its devices. The new autocorrect feature is particularly impressive because it's running on the iPhone, while models like ChatGPT require hundreds of expensive GPUs working in tandem. So it sounds like, yes, they're going to be using some AI, and they're calling it more like machine learning, but they're not using it as a marketing play. Apple, through history, has been known to be a little contrarian in areas, and this is just another one of those circumstances. All right, let's talk about the top 10 selling smartphones of 2022. This is impressive. They own 8 of the top 10 places. So you can see here the Apple 13, 13 Pro Max, and 14 Pro Max own the top 3 spots. Then at number 4, you have the Samsung Galaxy A13. And then you got a few more iPhones in there until you get to number 10 with the Samsung Galaxy A03. Then we move on to the top 14 best-selling laptops in December 2022. At the end of the year, you like to think about the hardware sales, really, especially in the consumer side, really ramping up. It's really from Black Friday, that day after Thanksgiving in the US, and then really leading through the holidays all the way to the new year. And here you can see, top of the list, Apple MacBook Air, number 1 spot. Then after that, you've got a few computers in here like the Acer, Asus, Lenovo, and then you get to number 10 with that Apple MacBook Pro. So a lot of competitive products in here, but it's good to see Apple has the top spot. To summarize, all 4Ms look great, but the question is, can this stock go to 300? The answer to that is absolutely. And I believe it can get there in the next 1, 2, maybe 3 years. But I'd love to hear what you guys have to say. If you like this video, go ahead and hit that like button. If you want to see more like it, hit that subscribe button. And if you want to learn more about investing, go ahead and check out Tykr.com. All right, see you in the next video. Bye for now.